Well, hello, Maverick traders. It's Joe with you here. It's Tuesday, the 28th of November, coming out of the holiday weekend. Let's jump into the markets. I've got my 2 cents. You know the drill. Take responsibility for the outcome. I'm going to break down the markets, give an analysis, see what happens when it comes to the news of the day, and the technical breakdown of where we're at as a whole. And as always with Maverick, folks, we love to share our trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, we have a little change from where we finished before Thanksgiving. What does that mean? Let's take a look at the daily news here, guys. Coming out of the holiday weekend, the markets remained steady and optimistic. No change. Kind of a high base up at these levels that we saw the week actually end in. Economic news shows flattening of inflation along with a confident consumer that came out today. So are we looking at that soft landing that we were hoping to get? As far as some of the news that I've seen, yes. And as far as the way that the markets have been trading, I should also agree with that. Doesn't mean it can't change, but where we're at, folks, does show that, hey, we're looking at least some sort of a consolidation towards the end of the year. I don't know if we're going to get a Santa Claus rally, but we are definitely glass half full here. How do we finish? The Dow, the S&P, the Qs, basically flat today after, coming out of the holiday. I don't think we're going to do much until we get a little bit more economic data. We do have a lot of Fed speak coming out at the end of this week. So I don't think we're going to see the markets do much. I don't think they're going to sell off, but for them to consolidate would make more sense before they could actually gain enough energy to push higher. That's kind of where I'm at. Oil and gold both higher today. I think that's kind of an oversold bounce that we would expect. So overall, folks, we're kind of where we were before we went into the holiday. Let's take a look at the advanced decline line and above below the 50-day moving average. Advanced decline line, 50% advancing, 45% declining. It was basically a flat day. This is doji day. I wouldn't put too much into that. But above below the 50-day moving average, we have seen a pretty good move over the last month when it comes to stocks above and below. 70% above, 30% below. I thought that was pretty interesting based on about a month ago that was flipped. So we are definitely showing a little bit of strength in the consumer overall. So let's get into it. Let's break down this chart. Here we are at this high base, and I'm not seeing too much outside of a high base. So as you can see, we are basically consolidating back at these levels here. I want to draw this all the way back because it's kind of interesting to see that we are just consolidating here. This is the S&P, so we are definitely pushing these levels. Now, volume-wise is a little tricky, because one thing that I thought was interesting is the volume is actually decreasing, but that would be expected when it comes to consolidation. This does not mean it's bearish. This does not mean that the bulls are done. It just means it's a little bit of a hesitation here, waiting for maybe the next economic report or the next round of stimulus, whether it be news or the rest of the earnings coming in to push this thing higher. You'll see that there's the same thing going on here with the Qs. The Qs is basically at this area where it wants to consolidate. It's a little bit higher than it was previous. The Qs are actually breaking into highs of the year, but once again, it's usually an outperformer. There is a pretty good range there that we need to kind of respect. I don't think I'm going to take any sort of action based on where it doesn't go, more so than, hey, take a look at where we're at. We're consolidating. It's a little bit high. There's just optimism in these markets more so than pessimism. So if I was to err in one way, it'd be kind of sideways to up, basically where we're at this range. Let's move on to the heat map here. You guys can see that it's basically an inside day. Some outperformers, some underperformers, but I'm not going to take anything into it. Once again, this is coming out of a holiday. We are back to business as usual, and I'm not seeing anything that's outperforming or underperforming with any sort of significance to where I'm going to change my outlook. So what is that outlook? It's right where it was. Above the 20, above the 50, the 20-50 slope is turning. We are super extended. I'll give you that. One thing that I've had a conversation with a lot of you guys out there is that, geez, Joe, we are way up in this range. Yes, we're way above that 2050, but of course we are. When a market reacts, when a market bounces, we get this late day, or late year, I should say, surge of buying. This is basically very, very typical of this type of pattern. So, do we want to fight sentiment here? The answer is absolutely not. So what I want to do is make sure that we can kind of understand what's going on here and take advantage of it. I'm at a +1 for the weekly outlook because I do believe we consolidate with glass half full, and a +2 on the monthly outlook because even with a pullback, I personally think that just creates more buying. The beautiful thing is, folks, this is my opinion. You don't have to trade it. That's why I have it. Now, when I get the technical analysis that supports my opinion, that's where I push the button. So let's move on to a couple of the trades that we've been looking at over the last week or so. I got Amazon and VAL on the upside, BEKE. I thought that was pretty cool that Rob brought that up on the Friday class of last week. It's still holding true. And then we do have some bears, but take a look at some of the sectors that these bears are in and be mindful as such. I only have one of each, but you guys, hey, feel free to go out and take a look at the ones that I do not list because they're pretty good setups. I did like VALE. I believe this is one that Corey brought up yesterday. But what I do like about this is that really cool, bullish engulfing pattern. You could see it engulfs the previous day right at this level. It's really, really nice. Now, we do have no follow through, and I understand that we don't have a lot of volume. So what you want to see is a move that actually breaks above this day, or right around where it kind of set it today, and moving higher. I'd like to see a little bit more volume here down on the bottom side to the upside, but it is a beautiful bull pullback, and it could be a pretty significant trade to the upside for people that are actually looking for some sort of a bull. Moving to the sideways trades, you can see that we have this BKE. Rob made mention of this. It's like, hey, we haven't seen real estate in quite a while, but I like it. I do like this huge area of. I do like to see a pretty good range here that we've seen over the last little bit. You can see the support and the resistance here. So we could, I mean, it's a larger range, 1720 all the way down to about the 1440 level, but it could be something you could play range bound or condor or something a little bit tighter if you want to go butterfly. It just depends on your expiration selection with this trade. Let's jump over to the bear side. There's a few bears here, but one I liked was deer. Now, I know deer's a little bit more expensive than most, but it did have a pretty cool line in the sand there. I like this descending triangle pattern going on. You can see, let me draw these here. Looks like it's just descending really nicely. It hasn't confirmed yet, so just be patient with this. This is a high cost stock. If you guys are going to do something, it's going to be definitely some sort of a spread, diagonal, something to compensate for the cost of this trade. If you don't like it, there are a few others there that I had listed that I do like. Just depends on where you're at. So overall, folks, consolidation coming out of the holiday weekend. Not a lot of change. I can't read too much into that or past that. It's just where we left off before we went to the holiday. We'll see where it goes. We got a lot of Fed speak here. We got the GDP numbers coming out, PCE unemployment claims, the manufacturing PMI, but the Fed speak coming out a couple of days later might really, I don't know if it's going to have any sort of an impact. These markets seem to have the idea that they really want to rally into the end of the year, and we really don't want to fight that. So just make sure you're putting more emphasis on charting than you are your opinion. Check potential trades as always for earnings reports. Other than that, folks, we just got to stay glass half full. We haven't changed our sentiment and our outlook. We are still bullish. We'll see if this market rally continues into the end of the year, and if anything changes, you know how we are, folks. We will always talk about it. Thank you so much for joining me. We'll talk to you next time. Bye, everybody.